All right.
Okay, great. So we got that at least. I've got you on my phone here. I sent you the invite link.
Oh, it's a host disabled participant screen share. So let's try that again.
Yep.
You sent me the invite.
Yep.
Because should I do send request? Send a
Sure.
request to be in there. I requested it.
Request to join. All right. So you should be coming in here. I've got my computer audio up or volume up, and I've got my phone volume turned all the way down.
Phone volume. Okay, I'll do that too.
So
Phone volume all the way down. Computer audio up.
I think we're good.
And what am I showing right now? Because I don't think I joined your live.
No, you did.
I just.
Or no, you haven't
This
yet.
is all I see. Yeah, this is all I see.
Accept. I just accepted your request, though.
All right. Perfect.
There you go.
All right, hold on.
Okay.
Hold on.
All right, we're in business now. Oh, man. Let me try to set up. I'm going to set my phone up on something facing my computer.
Did you let them know in chat too?
Yeah, give me a second to do that. We're going to grab. We're in my kitchen now. Coming back over here. Okay.
I just let them know too.
All right.
All right.
Okay, cool. All right.
Let me go over here.
We should be totally good now.
Oh shoot! How do I?
Got a bunch of people joining now that people know Manoli's live streaming.
You're funny. I'm trying to, dude. This tech. I feel like I'm 90 years old.
I feel like I'm 90, bro.
It's so bad.
I need to get a media team.
I know.
Let me see.
We need an AI powered media team or something just to get on Instagram Live.
I'm trying to go on Twitter now and let them know that I'm live. Give me 1 second. I'm gonna figure this out.
Yeah, no problem.
Okay.
We got some time. What's up, everybody? Thanks for joining. Manoli and I are just gonna kind of quickly run through trades from this morning.
Let's go.
All
What's
right.
up? Let's get it.
All right, cool.
It took us about an hour
All right.
to get all this set up.
It did.
And that is my
It took a
fault.
full
Let me see if I
hour.
can prop this up here.
That's all good though.
Nice.
Yeah, I've got my phone propped up on my water. I've got you pretty much full screen on Zoom on my screen, so that's what I'm showing right now.
Okay. Now, can everybody see Danny's screen? This is my screen actually on Danny's live.
So we're on Zoom on the computer. I've got Manoli sharing his screen, so you guys can see Manoli's screen right now. If we want to flip over a couple pages over here, now we got my screen. So I think we're all set.
All right. Yeah, so first I can start off by giving kind of a rundown of my screen here. Danny, if you want to move it a little to the left. So in the bottom left-hand corner there, you're going to see Dash Trader Pro. And a lot of people ask me about this. This is just their level 2 and then time and sales. I think I pay about $150 a month for this. And all this is, instead of using this level 2 here on Think or Swim, it's just faster. For me, it's easier to read. I feel like I can kind of get the picture of what the stock's doing better with that. Now, it was a transition because I used this level 2 with TOS for my first year on a Mac. So I've upgraded since then. That was a while ago. I think I'm at 3 years now in my trading career. So that's DAS level 2. Now, I use that too because you can see down here in the bottom left, you can see it says LU and then LD. Danny, can you kind of put it on that?
Yeah.
And that'll show. So those are the lower halt bands and the upper halt bands. So since I'm a momentum trader, if I see a stock is going up really fast and it's chasing a halt level, then I might be tempted to slap in there. And most people probably wouldn't, but I might be tempted to slap in there depending on what the market's been to anticipate a halt up and try to get a gap higher. So I love that because then you can also see the resumption prices as well coming out of a halt. So that's DAS. I use that a ton, and honestly, that's where my eyes are glued most of the day. Whenever I'm trying to enter, exit a trade, I'm only looking at that level 2 over there on the left so I can see the bids and the asks and kind of what's going on. Now, the rest of my screen here, I just have, this is my main screen. I have 5 other screens, 6 total. This is the main screen that I'm looking at. And I have 3 charts. The top one is a 5-minute chart. The bottom one is a 1-minute chart. And the right one is a daily chart. Okay, and then I have the active trade window up on the top right. And you can see here, so this is Vine screen. This says I made $16,598 today. That was on this stock. But if you look here for the PNL for the day, I took a loss on PRFX, RMED, and SQZ. So I took stabs at those and lost about a little over $3,000. So in this account, I'm green $13,470. Now I also have a Webull account. I don't have it pulled up, but I have a Webull account that I'm mainly trying to use for swinging. But sometimes I get carried away, and if I have it open, I'll start slapping it for scalps as well. So I actually made 11,500 or 11,800 in that one as well, which puts me at 25,000 green for the day. And there's nothing advanced about what I do. Now, that's not to say it's easy, but it is simple. And I preach this over and over and over again. And all I do is I look at trader psychology. I'm looking at human psychology and what most people are going to be looking at. That's what I'm trying to anticipate. I want to know where eyes are going to be going, maybe before they get there. And so I've been in and out. June has been pretty dry. I've been in and out. I've been traveling. I haven't been in front of the screens consistently for a while. So I haven't had like a good rhythm with it. There hasn't been much volume. I haven't been sizing in. I think with this account here, I'm only at, I can't do the non-privacy thing. I'm at like $50,000 in this account because what I want to do is I want to size down. I want to size down whenever the market's feeling choppy, whenever I'm feeling choppy. So maybe my trading's not good, but the market's fine. I want to size down because I want to de-risk. That's the number one thing I want to do. I don't want to lose money because that sets you days, weeks, months back. And anybody who's been trading for a little while now knows that that's kind of that vicious day trading cycle. You feel like you got it. You've been doing it for a couple weeks or a couple months. You feel consistent. You have 1 or 2 red days that gave all of that back, which is extremely frustrating. So the number one thing is de-risk. And so I'll size my account all the way back down to 25,000 if I have to, which is the minimum for that pattern day trading rule. Just because I don't care as much about the profits. If I'm off, if I'm emotionally off, if I'm just not in a good zone, if the markets are crappy and there's not enough volume and you're not getting follow through, I don't want to be there in a position where I can size in for $100,000, $150,000, 200, 250, and lose 70, 80 grand in a day. Because that's going to be much more devastating than me potentially being able to make $10,000 in a day and staying sized up versus me de-risking and just only making a grand or two. That's fine. So the number one thing, I went off on a tangent there. The number one thing I look for is going to be just the theme. I want to know what's going on, and not necessarily a theme like sector momentum or, reverse splits have been hitting for 2 weeks, or, IPOs have been hitting for 2 weeks. Look at the short-term themes too. Like on Friday, I wasn't even in front of the screens, and somebody told me BXRX was a strong runner, and it went from 40, it gapped up, it went from 40, 50 cents all the way to $1.43. So immediately I looked at the float. It was a 6 mil float stock. So today, and then the other one was Top Thursday and Friday, it went from $5 to $11, which isn't too crazy, but it's the most momentum we've seen in a little while. So I'm thinking, okay, let me look at the chart, BXRX. Let me look at the characteristics. It's a low float penny stock. So if I start to see a low float penny stock today that starts to get hit, right? I don't need to be the first one on it. I want to see that there's volume and other traders are trading it. Then I'm going to think, okay, other traders are going to be thinking, here we go, another runner. And I'm not looking for this whole move. I didn't capture a majority of this move. And it made a 260% move today. Stop worrying about trying to catch this big move. You don't have to. All you have to do is take advantage of a little guy like this, and that's 10% right there. You're telling me you can't get this little guy right here, and this thing moved all the way up another 150% just from this entry? I took this and I started telling people I like the 36 level. So when I saw this progress, we're in here, and it was probably right about, thank you, Danny. It was probably right about here. Oh, shoot. I want to say it was right about here that I was looking at this. And so when I saw this, first thing I'm thinking is 2 big green extension candles. It already made a move that's 100% in 10 minutes. I need to see some pullback, right? I don't want to chase that yet. I need a little bit of pullback, but this is perfect because it fits the theme. I looked it up. It had a low float, and it's a penny stock. And so I like this. My eyes and my attention are on this. And so I know other people were trading AHI, but I didn't like this that much. And this one still made a good move too, but it just didn't fit my thesis for, hey, this one ran on Friday, 200%. People are going to be looking for another penny runner that's low float that can run. I like that. That's a thesis for me. And so, no,
You
I
didn't
didn't
take any
take one.
trades on
And I saw
AHI, did
people
you?
talking about, I took SQZ. Guess what SQZ is? Oh, shoot. There we go. SQZ is another penny play.
I like that ticker symbol
Yeah.
too, though. Squeeze.
Yeah. So I tried to take a stab at this one, and it was right at this pullback here. And I saw on level 2 it was looking weak. So I ended up cutting it because then I also saw Vine finally was starting to base out a little bit down here, right at that level that I mentioned earlier. So I mentioned that 36 level. Why did I mention that level? A couple reasons. So first, we're looking all the way back here because this is where I noticed it, actually, right here. This is where I noticed it. And so if you look at my chart, you can see this yellow line, I think is the 9 EMA. I have it on all the time frames. And I'll just have these as guides. Purple is VWAP. That's going to be the main one I'm looking at. But I do like the 9 on the 5-minute and then on the 1-minute. The reason being is because if I see that it's following that trend, like right here, it bounced off here, I'm almost tempted to take that because it's showing a stronger trend because it's on the 1-minute. So, and it held it pretty well. Now, it didn't come all the way back down here, but on the 5-minute, because you need multi-time frame alignment, I'm seeing a little bit of extension, right? So I need this to pull back because this is up 100% in 10 minutes. And we know, but that's what we want to see. We love that because that's that volatility, that's that range. It has good volume. It has a thesis behind it from Friday momentum. And so I like this. My eyes are on it, and I'm waiting for a setup. And so I'm looking at this, and I'm like, all right, as it progresses, we see this 9 start to move up. I want to see this 9 catch up to the chart. Okay, so I want the chart to start to consolidate. I want to see these catch up a little bit. Right.
rather than the other
Right.
way
I don't want to
around,
start to see more
more
and more
so, right?
extension, because guess what? Shorts are looking for that mean reversion. They're looking for that extension and maybe a halt or two up to start sizing in. Where we're looking for the opposite. We want
Hmm.
consolidation. We want these MAs to catch up. We want it to base out a little bit. But we also want this range. We want that 100% move to happen, or 50 or 75 or 200, whatever the market's giving you. So I'm looking at this, and I said the 5 minute needs to cool down. I'm looking at 36 level. 36 level, because that's the low of this candle. So you have this initial 5 minute move. The low is 36 here. And then the MAs are right here too. So if I saw a quick dip right off of the MA, algos like to hit that 5 minute 9 EMA. So I'll try to anticipate that and get that wick and get some size in. It held up better early on than I thought it would. So I think I took a scalp trade I think I might have taken this scalp trade here off 41 when I saw it dip, just because it was coming down to that level here. Where was it? Probably right around here. What time is this showing? 9:45. So 9:45. Maybe it was right. Maybe it was on the tip here. But I scalped it because I saw it was coming down to that 1 minute trend now. So I'm like, all right, this is riskier. I don't usually like to take a 1 minute trend, but it's strong. And I'll take a little bit just for a tiny scalp. And I think I had a small winner on that one. So that was trade number one. And I scaled out into the pops. I scaled out as soon as it goes up, for 3, 4, 5%. Nothing crazy. I'm not trying to hit a home run here. I want scalps. I want trades within the bigger trade.
Hmm.
And it's nice because then you de-risk. If you do that, this is great for small accounts too. Because if you do that, you're mitigating your risk, because if it doesn't end up going and doing what we think it's going to do, because we're never 100%, maybe not even 50% of the time correct, it's okay, because you're just trying to take these little scalps. So this whole time, this thing's knifing. First off, this is what I want to see when I'm not in it. Because if I had FOMO and chased this too early, because I'm seeing all these green candles and I'm like, oh, it's a micro float, and oh, this looks good, and I'm throwing all risk management and price action out the window. I'm gonna FOMO in. I'm gonna be chasing this thing up here, and now I'm bag holding. And for me, I won't hold this whole thing. I'd cut it, almost immediately. But maybe with slippage, take a bigger loss. So you don't want to be holding this, right? Now it starts to consolidate. It actually starts to pull back to that 36 level. I take a trade, I think right around here. Maybe it was here.
You were calling it out when it was at like the top of, where's my mouse? When it was like right around here, you were calling out that 36
Yeah, it
level.
was it was pretty early. So I tried to anticipate something right in here, I think, and it didn't work out. So I cut it, and it was a tiny, tiny paper cut loss, and I'll do that. So I'll go in and out many times.
Hmm.
I'm not worried, and I'm not going to sit here and hold something if I don't like what it's looking like on level two, because I don't want to be early. I want my entry to be solid. As soon as I see this candle right here, this is the first 5 minute candle to make a new high. So this is the first 5 minute candle, which shows potential curl. So now I'm watching this, and I think as I saw this, I started sizing in for the first move. And so I sized in probably with 100-some thousand shares in this account, and then my Webull account, probably another 100,000. So I'm sizing in, and I see it, and honestly, I think I probably took some off at VWAP. I always do that. So size in, peel some at VWAP, and then I'm peeling off. It was so strong, I started peeling off into this candle here. Because when I'm looking at something like this, and this comes with experience, when you're looking at trading something on like a 5 minute time frame, and it's showing first strong leg with tons of range, so it's 100% move. Now I'm looking for a nice size pullback, and 36 is just a rough estimate, and it came a little below 36. It went to 35, 34, but it's 100% move. I want at least a 30, 40% pullback, and then I want to see that start to hold. That's that range we look for. That's that rubber band. So I'm already in my head painting the picture for this setup, because I've seen it over and over and over again. Now, in this kind of market, I am taking my profits sooner. And some people might say that forms bad habits. That's
Hmm.
fine. I want my money. I'm not going to sit here and when I've been trading for 2 years and I recognize that you go through different market shifts where, there's slow periods where nothing works and you see it and you're beating yourself up because you think you suck at trading now and you don't. There's just 2 or 3 month periods where nothing is going to work. Everything's a false breakout and shorts are going to eat. And those are those cycles that over time you get used to, and you just have to be emotionally disciplined enough to say, this isn't the market for me yet. I'm going to size down, hold on to my money, and then when things start to work again, I'll size back in and I'll hold longer. And so for me, I'm in the mentality, and Danny, I'm sure you're the same
Yeah.
right now, where I'm taking profits off quick. Nothing has follow through. We are seeing
Yeah,
full
for
round
sure.
trips every day. So I don't want to be caught in that. I'm going to try to take my, $1,000, $2,000, $3,000, $4,000 a day that I can get with this market. Now, I wasn't expecting to make 25,000 today at all, but that's just how the cards fell. I mean, I just wasn't afraid to size in when I saw this range. And then
Well, that's the thing. Like just a minute ago, you were saying how it can build bad habits to be taking your profit too quickly. And I think, especially as a beginner trader, that's for sure true. But like neither of us are beginner traders at this point. We just understand that in this
right.
market, this is a profit-taking market. When you get an extension like this, like you get something that goes straight up, you take profit. Maybe, if you get a great entry on it and you're in from down here, you can hold some of your position and hope that it goes higher. But especially in this market, I'm not expecting this second attempt to break straight through this high here where it has topping tails and wicks. And, it would be great if it does, but you have to be taking profit
Yeah,
into that
no,
kind of
spot on.
move.
And over time, so you guys might be thinking, all right, well, why is he thinking that it's going to go here? Why is he, anticipating this? Because I've seen it over and over again, and it's almost like what I want to see. So when I'm seeing a certain setup, and you'll see me in chat rooms talk about this, I'll say this needs to pull back. This this almost scared me right here. And because what I'll say this needs to pull back, give a 5 minute setup, because if it goes too early and it's premature, then it just gives shorts an opportunity to load, and then longs get bagged because they're chasing, and then you have a full round trip and the setup's broken, and you won't see me come back for it. So I don't want a premature breakout. I don't want it
Hmm.
to already go like this. This almost shook me out. I mean, I don't think I was in here. I mean, this almost like got me uninterested in the setup because I'm like, all right, I want this when I see these three candles here and I see a move that's up 100%. Now I want to see this. Let me get rid of these. Now I want to see this right here already. So I'm already trying to paint this picture in my head before it happens. I want to see this next couple candles start to pull back. Give me two red candles. Give me that consolidation because we already have the range. It's already moved 100%. Percentage is all you need to look at. So when this happens, I'm thinking, oh crap, we're going to get a false breakout. Look at this big volume candle. This chart might be broken. But I stayed with it. And as soon as I saw it on the 1 minute here continue to hold up, I said, okay, all right, well, it's stronger than I'm thinking. And then you see it happen. So now you see it start to pull back and give that range. Now it gives you that opportunity. Was that 20, 30% pullback? That's what we want to start to see. And so now, in my head, I'm trying to figure out, okay, well, is this going to be a full round trip, or are we going to see some continuation? Are we going to see this go like this and start to build a symmetrical triangle or an ascending triangle or some kind of consolidation that looks bullish, some kind of flag? That's what's in my head the entire time. And so,
Because you're already holding up like
yes.
60, 70% move, and that's where you
Exactly.
want to
And now
be.
here's the thing. We see this all the time, and you'll see something that goes 50 to 100%, and then it comes right back down, and it gives away the whole move. And that's what I mean by a full round trip. It'll go up, and then it'll be red candle, red candle, red candle, all the way back down with no bounce. And so that's why you have to sit here and have a clear risk level, because I'm wrong all the time. I'm wrong a lot. Look today. I was wrong on 3 out of the 4 stocks I traded, but look how quickly I cut them when I was wrong. RMED, $1,300 loss, or $1,500 loss. SQZ, $1,300 loss. PRFX, a little tiny loss. I'm wrong a lot, but I'm okay with that, and I'm okay with cutting them when I see that I'm wrong,
Yeah.
and I'm building these.
That's the important part. And to note, for anyone who's not aware, those are small red trades for you. That's very manageable. And like I look at my trader view stats all the time. My accuracy is 50%. And it used to be much higher, but I've really dialed in risk and reward. My biggest winner today was like 1100. My biggest loser was 100. So when you're dialing into getting the right entries and understanding how these moves work and how the price action works, and you have a clear risk level or a clear point where it makes sense to get in based on, you know, this holds up here and you've seen this move happen before and you know that it can extend up
Mhm.
here, but your risk is only like the bottom of this
Yep.
candle, that's 10 to 1. And that
No,
makes sense to
exactly.
take
And
that
that's
trade.
funny you brought that up because I used to have a higher win rate too. I think my win rate was like 75% when I first started
Yeah,
out,
me
because
too.
I would just take 1 minute scalps and like I just be in and out just trying to get little wins. Now that
Yeah.
I'm trying to size a little bit more, or that I'm just more patient and I don't really care as much about those quicker profits, I'll try to find spots where I can size in. So I'll take less trades, but I'm prepared to size in a little bit more. But yeah, so here I took a loss on this. I took this loss because it didn't go quite yet, and I thought it'd be a little quicker. And when I was looking at level two, it looked like it was getting held down, and it almost looked like it was going to be a full round trip. So I took a loss, but then as soon as this first 5 minute candle goes, I'm back in this, and I'm looking for this candle. So I'm almost ready. I don't want it to break highs yet. If this went green, 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 and broke highs, that's just not natural. I want to see a
Yeah. Then you're kind of
yeah. I want this
confused.
to
Then it
build
doesn't
up
really make
pressure.
sense.
This is a pressure cooker right here.
Hmm.
This reject here, beautiful.
Hmm.
Now I get to get in again. And what I'm thinking here is, I told you guys, I was thinking I wanted a quick sub VWAP dip. I'll show you right real quick. Let me see. Right here.
That's a good point though that you just said while you're
Yes.
searching for that. Now you get to get in again because like you already got this bottom up to that almost double top. Like that's one trade that you can look for, and now it comes back down. If it holds up again,
And you're
then it's just another
compounding
trade that you get
gains
to take.
so much faster than you realize. Instead of having this home run
Yeah,
mentality where one, you need the perfect market, two,
right.
you need tons of patience, and three, you need to pick the right ticker. So when you're trying to capture, like let's say you saw BXRX was moving and you were like, oh, okay, I know there's going to be a penny runner. In a normal market, you're going to get like 4 or 5 penny stocks that pop. Most of them are going to fail. Which one is going to be the one? Nobody knows. And it's why it's so frustrating when you see these gurus that are like, they call every stock out and they say worth watching. You don't hear from them. They
Yeah,
called every ticker out that's a top gainer, and then 15 minutes or an hour or two later, they say bang. And you know darn well that they didn't capture any, they probably weren't even in that trade, but they just want the credit for that. That's not what you're looking to do. And I think it gives a false kind of reality of what actually happens. Let's say Vine popped up here and you got it while it was up the momentum, and you got it for a 5% move, but you just scalped it, and then it did a full round trip. And let's say, because like SQZ did that, and I would have been holding all the way down here for a 20% loss if I had that mentality, but I don't. It didn't do what I wanted. It was a little higher float. I got out right away. And it'll happen 3 or 4 times. And so like if you have this mindset where you're like, okay, I'm anticipating kind of this range, and I want to just trade this range. I want to just get 5% scalps or even 2 or 3% scalps. Then what'll happen is your your patience will be kind of managed better, because you're not sitting there for an hour and you see your money go up and down and it keep coming against you and you have no idea what's going to happen. You get to keep compounding your gains. And so I took 1, 2, 3, 4 trades on this, and guess what? I didn't hold for any of this. I scaled, so I didn't get. I could have made 100% today based on some of my entries, but that's just not practical, and we're not in that market. So stop having that home run mentality and start taking your money because it compounds
Hmm.
way faster than you think, especially with the small account. So once you have experience and you start seeing these setups over time, first you have the thesis. You have what do you have? Number one, you have a previous runner with specific characteristics that surprised people, right? That maybe people didn't anticipate. For us a week ago, guess what it was? AHI. AHI went 1,000% in, and go to the daily chart on the bottom right if you can, Danny. Thank you. This one out of
Yeah,
nowhere
yeah.
was a penny stock that went 1,000%. Guess what? It doesn't matter if you missed this because that was a Friday. I came back from a bachelor party on Monday, and I knew after somebody told me AHI went 1,000% that I'm looking for a penny stock today that's going to run. I think I made like 30 or 40 grand that day just because I knew people are going to be looking for another one. And am I looking for something that's going to go 500 to 1,000%? Absolutely not. I'm not even looking for 100%, not even 50%. I'm looking to trade most of the penny stocks that are popping on Monday for a 5-10% move tops. And when you do that, you get more confident and you put more size on, and then eventually one will continue to go and leg up higher and higher and follow a good trend, and you can make a little bit more money. But stop trying to, you're all trying to get this. You want to get the next AHI because you have $1,000 in your account and you're dreading how much time it's going to take, when in reality, if you understood how fast compounding works, it would take you 6 months to a year of just some discipline and taking 2, 3, 4, 5% a day, because that's doable here. We're seeing that every day. We see 50 to 100 or 200%. So all you really need is 5, and that's very realistic. We're not trading large caps. We're not trading mid
Yeah.
caps. So we're not trying to. The S&P 500 isn't our benchmark. We're not trying to get 10% a year. We're not moving around millions or billions or trillions of dollars. You have $10,000 in your account. You want this. You want something that's going to get you 5-10% in a day. So that's important to remember, because people are saying, they'll say, oh, it's not realistic to beat 10% a year. And I had all those professors in college too, but it depends on what you're trading.
Hmm. Totally depends. Yeah, like
Yeah,
if you
you
have
can't trade
billions
this.
or trillions of dollars, your vehicle is, yeah, exactly. It's not tradable. You can buy up the entire float, and it's just not possible to trade it. You have to be putting your money into the bigger stocks that they're going to move like,
Mm-hmm.
10% a year. And on $1 trillion or even $1 billion investment, there's your $100 million return. But on this stuff,
No,
it's just
but
not,
it's
that's not
nice
what's
because
happening.
it also means that the big institutional money isn't playing the same game as we are. And now there still are
Yeah,
algos.
because
Exactly.
they can't. It
They
doesn't make
want,
sense for them.
like Danny just said, they want billions of dollars. They're trying to find out how they can make billions over years and decades. We want to make, peanuts. But I mean, peanuts to them. To us, that's a lot of money.
Hmm.
You can make millions of dollars doing this because
Yeah.
all you need to make is $4,000 a day. There's 254 trading days, and you'll make $1 million at the end of the year. But start with 100. Start with $100 a day. Start with 200. And once you can prove to yourself that you're
Yeah.
consistent, then you can start sizing up. But so this gave multiple opportunities, and I missed the big bulk of the move, and I probably made more money than a lot of people on this trade because I have that mentality, that experience, but that discipline too. Danny said to me after, while it took us an hour to set everything up, he said, "Man, so you can just look at this, and it's at that point it's halted up. I've been out." And he said, "So you don't even care."
Yeah, we
He
were
said to
both
me, "You don't
out. We were
even
good.
care that this is
Yeah.
continuing." And I'm like, "No, I really don't. This doesn't matter to me. I got my money and I'm out. And this could,
It's great to see. Yeah, exactly. It's like you already got your money out of it. It's great to see it going up more, but what are the chances that, and the way that it happened too was this one candle went from 50 to 64 and halted up. Like, what are the odds that you catch that one candle when the candle before doesn't look that hot? It's coming back up, but still you've got all of this resistance to get through. You're not going to count on getting this additional move out of it. So, why get bent out of
Exactly.
shape out of that
No,
if you miss
spot on.
that?
And I think the biggest takeaway here, and I guess we'll open up to questions, and I'll let Danny talk too, because I don't want to talk everybody's ear off.
We'll
But
have to.
but I just haven't done a
That's good. It's valuable. Like, this is
yeah,
$25,000 worth of information. We're gonna have to rejoin the Zoom in just
because
a
we're
few
on
minutes,
because we
but
still got
all
free Zoom
good.
accounts. Yeah, this is
Someone needs to we need to start a GoFundMe.
this is the first recap. So sorry if I'm knowledge dumping on you guys, or I'm talking too fast, or it's not that organized. I'm it'll we'll
No,
It'll
it's
get
great.
better over time. I'll work on things, and I'll try to put out more and more content. I've been meaning to do it for a while, and I keep having people. Oh, I know, since like
Since
last
like the
year,
new year.
and people keep telling me, they're like, "All right, it's been
Yeah.
200 days since you said you're gonna do a recap." And honestly, what ended up happening is I took a massive loss. So I was on a solid streak
Yeah.
in, I think it was May, and and then I got hit with a
Yeah.
$100,000 loss in a day, and go ahead.
Were you like the day before you had like a hundred
Yeah.
thousand or like
Yeah, I
75,000
was
gain,
up.
right? And
I
then
mean,
you had
and
that
that was
loss.
coming off
Yeah.
of like a 300 or $400,000 month. So I was on a solid streak. It was a Yeah, I think it was 300 or $400,000.
Yeah.
And so when that happens to me too, I know that I need to start to cool it, because your emotions run high,
Hmm.
and that's the first thing I'm looking to manage, are my emotions and my account. And so I know eventually we're going to be in a market where things are going to slow down, and I'm putting on too much size, and I'm getting carried away, and a big loss is coming. So I actually told my wife the day before, I said, I should probably size down now. And like she doesn't care. She doesn't care about any of this. But like I'm thinking out loud, and I'm like, I should probably size down on a nice run. I should manage, the coming
Yeah.
days, because things were already starting to feel a little choppy
That's
most
something that you do
of the
really
time.
well, though, is you start to understand, yeah, most of the time. You start to understand when you need to size
Yeah.
down and you'll
And
pull the
so
money out of your
I did it
account.
this time, and look at what happened. I lost $100,000, took my biggest red day, and I did a recap the day before, and I decided not to put it out. And it took me, a week or two, and I was just like, all
Yeah.
right, back to the basics. But here we are. And that sounds like a lot of money, and it is. But to you guys, maybe it's $1,000 that you lost that day, where it took you 2 months to get and build up 50, 100, $200. It's that same thing, just on a different scale. So it's nothing new. Once you learn how to
Yeah.
do it on a small scale and become consistent and manage your emotions and manage what market you're in, you'll get better at it. But chances are you're still going to get hit with the big loss that's devastating, that's frustrating, that took away weeks and weeks or months of progress. And I just had somebody, yeah, it's going to
Every now
happen. It's
and
it's
then.
inevitable, because you're going to get emotionally hijacked. There's no perfect plan. It's going to
It's
happen.
just
You just hope to get better at managing it over time.
exactly
So don't beat yourself up.
when you're in the market, when you're in the market, there's always risk. And just like you said, it's just a different scale. You're always going to take losses. You're always going to have, it's not like I'm doing really well this year. I'm at like 14 red days. But still, they're happening every now and then. The goal is you spread them further apart, and ideally, not all of them are very big, but still, there's going to be a big one here, a big one there. Something that Ross uh, got through my head last year, finally, was the impact that those red days and the bigger red days especially have on the bottom line of your year. And I was finally this year, I'm like, man,
Yeah,
really
I still need to work on
avoiding
that. You've
those.
been crushing that though, Danny. You've been super. This is the most consistent I've seen you in a while. But no, you're right. Those, I
Yeah,
look back.
I'm just on my toes constantly, and I'm in the profit taking mindset. Like I can recognize a good move and try to squeeze as much as I can out of it, but I'm taking
Yeah.
profit,
Well, it's
and that's
whatever
been
you're doing is
helping.
working. Oh, the free Zoom. Do you want to just
Thanks.
invite me again, quick?
That's fine. Yeah, just uh, you just join on that same link, and it should pop you right back in here. There's me for now. it should. Yeah, and there's the market
I
close for
can't
today
hear a word
too.
you're saying. Hold on. What's that?
Oh
Oh,
yeah,
there we go.
why
Yeah,
not?
I can hear you
Can you
now.
hear
Let
me?
me,
Yeah, it's because we have a
did
bunch of
you
different
send it?
stuff going on. I didn't
I
send
can
it.
just,
No.
oh, you're
Do you
right. I
still
can
have
just
that
rejoin the
link?
same one.
You can just rejoin it. Yeah, because it's the same, just like default link.
And what I want
There you
to
go.
do too for everybody
You
is I
should be
do
able
want to
to.
go through and I want to put out, all the basic stuff, all my settings, all the things I use. I'll put all that out and I'll make some videos where you guys can just see exactly what I'm using and doing. And that way, hopefully, that can help some of you just to organize and manage things. Uh, are we in?
Yeah, we're in, but
Okay,
your
I did
video's
that.
not popped
And
up
then,
yet. There you go.
all right, back.
There you go. Okay, cool. So we're right back into it. Right back into it. Nice and smooth. All right. Do you want to keep going on anything, or do you want to do some Q&A? I I can't hear you now.
Okay, we good?
There you go. Yep.
Okay. I just want to wrap up on the Vine thing by saying this. First thing you want is on any play that I'm looking at is a thesis. My thesis is, was there a previous runner where everybody else is going to be trying to get in on? And there's different theses. There's different it's all right, was there a big move that happened where, okay, we might spark some momentum in those similar characteristic plays? That's one thing. There's sector momentum like AI. And so there's those which once
hmm
we start to get in a strong market, sector momentum is the best. That's where you can start swinging and taking big size. So
Yeah.
I'm excited for that. But for right now, while you're trading day to day, just start looking at whatever's trading the highest range. Look at the highest percent, then build a thesis. Look at what the characteristics are. Was there a news catalyst? Okay, if there was, what was the catalyst? And see if tomorrow, the next day, there's a similar catalyst on a similar characteristic setup. So similar float, similar price. Look for that. Okay, that's kind of your thesis. That gives you a little bit of conviction to say, okay, I think eyes are here. Now, the second thing is look for range. Okay, I want something that's moving a ton. All right, this moved even more than I would have thought it would so quickly with just 4 or 5 candles in a row, but it's moving, right? Then the second thing I'm looking for is I want to see consolidation and I want to see it, and I'll even, like I said, start to anticipate higher lows and build a trend. It's like I'm almost painting that entire picture in my head. Whether it works or not, that's what I'm doing. I'm already looking and painting this picture. Now, I don't know exactly where it's going to go, but I'm looking at, okay, halfway through, start to build higher lows, reject before the high of day, pull back, give another entry, and start to build up, build higher lows there. And then you have your 5 minute breakout. And so I took it in multiple spots. And then I even said here, I wanted a sub VWAP wick. I wanted a soaker. I thought we'd get it right off this level right here. Right at 41, I mentioned it. It actually ended up holding up stronger. It came here, and as I saw that, I took it, and then I started on the breakout. I think I started scaling out into this breakout, and then I was done. I was done. I made my money on it. I'm not going to overstay my welcome. You have to get used to realizing that at some point you just have to call it quits. And I think a lot of people struggle with that. I think you want to keep thinking, oh, I can make more money. I can take more trades. What if it keeps going higher? It doesn't really matter. And so the thing that
hmm
matters is that you are green that day. And so you took your profits, even if I just took one trade back here and I made 5 or 6 grand and that's what I ended on, I'm ending green. And eventually we're going to get into a market and I'm going to get into a rhythm where we're getting follow through and I'm staying a little longer. But today, it might not have been that day. We're in a choppy market. Volume's dry. I was not expecting this 25,000 today at all. Not even close. I thought I was going to go red. I think my first 2 trades were red today. So don't beat yourself up. We're in a tough market. Take your profits quicker. I think less screen time is also a good thing. I think if you've been trading for a year or two, Try taking less screen time. Try only trading for 15, 20 minutes and shutting your screens down and just winning. Just give yourself some
Hmm.
wins. And then what'll happen is if you're only trading from like, 9:15 to like 10:30, you're gonna perfect that 9:30 to or 9:15 to 10:30, you're gonna perfect that zone. So what'll happen is you'll start to notice when, oh, things are strong, or oh, we're seeing red to green moves, or we're seeing gap and
Hmm.
goes. And because you're looking at this little section of time versus this whole day where you're trying to figure out, all right, what's going on, where, I keep getting stopped out, I'm chasing and then I'm losing and then it keeps going later, and you're just beating yourself up. But that's pretty much it. It's not overly complicated. It's not easy because it does require a ton of discipline. You have to be just super self-aware and emotionally aware of what's going on too with other traders, because you're trying to kind of anticipate. You have to recognize what market you're in, which isn't always easy. Um, there's a lot of different things that you can work on, but as far as the next indicator, the next strategy or setup, those things are constantly changing. And so there are a couple different types of traders. There's the crackhead trader. I like to call myself that kind of trader, because you're just like, all right, what am I looking at? I'm going to get in, get out. I'm kind of just playing whatever the emotions are of the market. Then there's your engineers that are like, all right, I'm going to get this 5-minute 9 EMA and I'm going to get it every time. And that's fine, because when it's not working, you're hoping that you're disciplined enough to just not take them. And you're like, all right, these haven't been working. When they start working again, you have a consistent system. That's not me. And then there's your analysts, right? Your statistic based traders, where they're looking and they're seeing, okay, they have this big data pool. They've looked at so many setups. They've looked at every which way, and your Steven Duxes, your Gratanis, your Excel guys, and I know a couple of them too. It takes a lot more time to build that edge, but it will help you manage downside risk more. Those guys are better at managing the losses because they only trade high probability plays. Now, I kind of do that, but I'm doing it
Hmm.
off of a whim, off of a feeling, off of what I'm kind of recognizing day to day. I'm not like my buddy just said. He said stocks that are running intraday 300% are closing at least up 100%. Every stock that's done it is closed up 100%. So like they have this edge where they notice now, all right, well, if it pulls back XYZ, there's chance are there is going to be a bounce off, this T level or this level. There's a 70-80% probability. So I actually tried to do that with machine learning and AI, but it takes a lot of time to try to figure out how and what setups you want to include and analyze, and like every level of the setup, and so there's different ways to trade, but just find out what you want to do, what works for you, what you're able to become profitable in, and then stick with it, and then eventually you can branch out. But that's my 2 cents. I think that everybody wants to be some specific type of trader, right? Like I want to be able to sit in front of these screens all day and be disciplined enough to not lose money later on in the day, but I can't. I know myself, and I know that I will take trades out of
Hmm.
boredom, and I will end up going red, and I've done it many times. And so now it's just like, all right, I can't do that. And eventually I'll try and I'll dabble, and maybe it'll work, or maybe I have to kind of step back again. And that's fine, but do what's working consistently and long enough for you to make money, and then eventually try new things. But that's all I have right now. That's for the first recap. If you guys want to ask questions, we can do that. Danny, I don't know if you want to get into some stuff or talk. I don't know. You've done these before. I haven't. So we can do whatever you want.
Yeah, I mean, I think we probably have like 10 minutes left on the Instagram live before it kicks us out, but we can answer some questions if you guys have questions. I don't really have anything to add on what you talked about. I think that was a gold mine. Um, I started finally really paying attention to all of these things that you've been saying, probably last fall after I had like 3 red months in a row. And one of the things that you said to me was, are you starting out red or are you going green to red? And I was like, I'm probably going green to red most days. And you were like, well, then just stop when you're green. It's like things like that. And you said it just a minute ago. It's like it's not complex, but it's not easy. Um, I think that's the key, is like all of it makes sense, especially after you've seen it over and over and you have a year or two or, of experience. You see the same things happen over and over, but it doesn't mean that it's going to be easy to capture this whole 200 whatever percent move. And then you also have to understand, like, you get just a fraction of this
Oh
and
yeah.
you're paying the bills with the right size. So yeah, it's just something that takes time. And like we were even talking about, like we still have red days, we still have drawdowns, and it's just on a different scale. It's not like we're never having red days or anything like that. It's just how you manage it and how you manage those red trades versus your green trades. Like I know that one of the things that's really triggering for me is when I take a whole lot of paper cuts. And so I've been trying to keep my hands off a little bit more. And also, interestingly enough, when I have started sizing up from, like 500, 1,000 shares up to more like 2, 3, 4, 5,000 shares now, if I'm in a trade and it doesn't start paying me right away,
Love
I'm
that.
out because I was wrong. Because I thought that was the spot to get in. It didn't start paying me, so obviously it wasn't. So I get out. And, I'll lose 1 or 2 or 3 or 4 cents on that 3 or 4,000 shares. But when we hit the right trades, like I said earlier, my biggest winner today is like 1,100. My biggest loss is 100. So it doesn't matter that my accuracy is 50%. Um, I traded just a little bit of Vine today, so not that much to cover on it.
Yeesh.
I'm up 550 on
What
Vine.
are you at on the day?
Um,
2 grand?
yeah,
Freaking
I'm at
animal. And
2,300 on the
you've been
day.
managing
So
to have almost no red days, which I love.
close. I'm keeping it tight. I'm keeping it really tight. So I try to, if I take a loss on something, I try to move on quick onto something else that's moving. Because if I'm red on a trade, I know I'm a good trader. If I'm red on a trade, more than likely it's because of the price action on that stock rather than just, I'm a bad trader. So I try to move on to something else that's going to pay me rather than something that I'm losing on. Um, this was my main ticker today, AHI. I'm up about 1740 on it. I got in on this halt resumption. It was a really strong resumption. It held up really well. I got in right here for the break of 550. I held full size, which was only 1,000 shares. So relatively small size. Like this is not, I'm not outsizing anybody, I think, in this chat probably. Like 1,000 shares is very common. I took 1,000 shares here at 549, held full size into this halt at 564, opened up 30 cents higher. So I'm already up like 500 on that. Took a little profit as it extended and hesitated because that's what you should do when you're up 50 cents, you should be taking profit. It held the level, so I added back and got more into this extension. So that's my trading for
Nice.
today.
Love it,
Um,
Danny. Yeah, so
quick recap.
how do I go in
Yeah,
here and look at all these questions? Like I keep
you should be able to pull it up on your phone, and then there's just a stream of
uh
questions in there. Um, this will
like I gotta
be,
scroll
and
through
it'll
because like they kind of
automatically
disappear. Do I
like
click on it
say,
and then just start scrolling through it or
yeah, you can just start scrolling through the screen. Like you see everybody's
yeah.
names and some questions
All
coming
right,
through at the
let's see.
bottom. You can just
So
scroll up on that.
Obaro said, "What's your starter size?" This is one of those.
And quick before we get into that, if this does cut us off, we
Yeah,
can just hop
yeah,
right
that's
back on.
fine. I have a tea time at 3:20, so I got some time here. Okay.
So you're good. I don't
Yeah,
think we want
no.
to be here another two
What's your
hours
starter
anyways.
size? So this is one of the reasons why you hear me say that I have to size down my account. If I have the money in my account, I'll use it because I get carried away. And that's the one thing where it's control your environment,
Hmm.
not don't control yourself. which you could learn if you read the book Atomic Habits. It's very difficult to do certain things yourself, to have like the self, like for example, if you're somebody that binge eats, right? And you have the desserts there, you know you'll eat them. You can't just have like one or two. So then what do you do then? You just don't have them in your house. And it's the same thing for me here. When I'm trading, I need to manage the money that's in my account, because if I have the money, like today, I'm only using a $40,000 or $50,000 account. So I actually made this, I must have made 25, almost 30%, because I had 40,000 today, and now I'm at 53,000 roughly in this account. And I have my Webull account, but I like this setup so much, and I
That's
have a lot more
nuts.
money in that account because I want to use it for swinging. I started slapping it with that account too, which is so bad because that's gotten me into so much trouble. But that's why I have to like
That's
manage
hard.
what's in my account. So starter size, I'm like a full port kind of guy. I don't really, if I like Danny said, if I like my entry, two entries max. If I'm like, all right, I'm jumping the gun here. I probably shouldn't take this. Maybe I'll take half size. Then I'm full sizing on the next dip. So, and then I'm stopping out if it didn't go up from my entry. So it really just depends on how much I have in the account and how much liquidity there is in the markets. And I'm trying to read it based on that because I don't want slippage. So I don't really have I don't
That's
have like a set,
that's
hey, this is my
interesting.
size. This is my specific sizing that I'm going to be taking these trades off of. I really just don't. So that's why I need to manage what's in my account.
It's interesting the way that you were talking about your executions in that way, because I'm the same thing. I'm like, if I see a trade that's worth taking, there's no starter size. It's if I'm, and it depends on where your risk and reward is too. Like if something is squeezing up and you want to capture a portion of the remaining move or whatever, it's like look at your risk and reward.
Hmm.
I could take this with 100 shares and maybe get another 10 or 20 cents out of it, but what's the point of that when the downside at this
Right.
point is 50 cents down? Why would
Yeah.
I take that trade with any amount of shares? So, like, when I see a trade that looks good and looks right, I'm just in with my full position, and then I can scale out and scale
Yeah.
back in.
No, spot on. And I feel like for us, since we're trying to nail our entries, I like sizing in more at my spots, or fuller, should I say, depending on what I'm using, and scaling out quicker. I like doing that more than I would rather have smaller
Yeah.
size and take everything and try to hope for a 20 or 30% move, because I know we're going to see more. You're going to see more
Yeah.
3 to 5% moves or 10% moves than you are 20, 30, 40% clean moves. And so it's just easier, I think, to just size in on a good entry, scale out after
I
5,
think so
10%
too.
or whatever you're looking at for depending on the range of that move. And then you're good, and you build
I
you
think
build more
so too.
confidence
Yeah.
that way
I
too,
couldn't
because
agree more.
you're not watching the play happen and you're like, oh crap, here it comes against me. Am I gonna get stopped
Yeah.
out? It's like, but yeah, and
That that way too, though, I find I'm so much happier to take profit when I got in where I wanted to with a bigger position because I'm not looking for a home run. If it only has 5 or 10 cents range out of it, I'll
mhm,
scale out into that pop rather than taking smaller size and hoping for a 20-cent move when it gets
exactly.
rejected straight back down to my entry.
So we're similar there. Another one said, Manoli, can you give an overview of how you scale up to 100,000 shares? Yeah, I mean, so it depends on the price, the volume, and how confident I am. So if I if I really like it, then what I'll try to do is I'll just try to start sizing in more aggressively. And so I'll mainly use actually that's tough. I'm like 50-50 with limits and market orders. I'm not really all or nothing. If I'm waiting for a dip to come down, then I'll kind of use limits most of the time, but sometimes I'll also have, like if it's a slower bleed, I'll just start marketing in with some of my orders. And so I can market in 5,000, 7,500, 10,000, 20,000 shares at a time, depending on what the broker will allow me to do. And then you can get filled pretty quick. I mean, again, if I'm nailing my entry,
Hmm.
I'm not too worried about a couple cents of slippage. I know some people are so particular about it. They're like, all right, if I try to start sizing in here too soon or too fast, I'm gonna get like a cent of slippage. I mean, I'm not looking for 1 cent here on a 40-cent stock. I'm looking for, 5 to 10 cents. So I don't care if I get a 1 cent or 2 cents of slippage. If I like my entry, if I like the setup, I'll take it, and I'm not afraid of the risk. So yeah, it kind of just depends. But I feel like if your entries are good, don't be afraid to get aggressive on just scaling in quick. Most of you probably aren't even using that much size, so don't
Yeah.
overthink it. How do you size in? What determines your
Hmm.
size? Yeah, I mean, again, same things. It's just however much I have in my account, really. So that's why I gotta just size it down most of the time. But yeah,
How do you size in though? At least for how I think about it, if you're talking about like different setups, or how do you determine what your size is? Like uh, whatever setups are paying you most,
yeah,
that's what I'm going to size into most. Breakout trades right now, I am not going to be buying a breakout spot with my full size, maybe half size if it's a really strong breakout. But if it gives a dip before the breakout, I'll be in full size. Um, so I just, over time, you develop what your most profitable types of trades are. And one thing that I heard this year that kind of hit me was if you're not sizing up on your best setups, it would be irresponsible not to, because you're going to be taking red trades and red, paper cuts here and there and all of that. But if you have experience and you have some consistency and you know what your best setups are, if you're not sizing into those, you're doing yourself
yeah.
basically a
No, I like
disservice.
that a lot. Where'd you hear that?
Uh,
Yeah, oh, he's a
Lance
beast. Yeah, that guy's
Brightstein.
an animal.
Do
He
you
was
know,
with
you know?
SMB
Yeah.
Capital, right? And then I mean, he's an eight-figure
Yeah.
trader,
Yeah.
I think, like
Yeah.
every year.
Yeah. I knew he's well into seven. Yeah, he's probably over
Yeah.
eight, into eights. Yeah.
Um, got a question on sizing. When you look at a setup on pennies, do you get in once or you build a position? Depends on the volume. If there's enough liquidity there,
Hmm.
I don't ever want to be like majority of the volume. I try to stay away from lower volume plays, but Vine, I think, already had, what did it have, 10 million in like the first 4 or 5, plenty.
It had
And
plenty of
so,
liquidity.
um, like I mentioned earlier, I'll take multiple trades on it. So I'm not I'll size in if it's like right around a nice support entry. So maybe around that 36 level. I sized in more gradually, but and try to build a position. But like on a dip right before, so the higher low dip right before the 5 minute downtrend break, on that I'm trying to slap in because I'm anticipating just a quick sell off right here, and then it rockets through that level. And look at that, you got 9, 9, 10 cents immediately right here. Oh, it's beautiful.
That was a nice
Beautiful. But
move. That was surprising.
these when they work well. And so I used to love these setups where you just get that higher low, that just building up that pressure, and then that downtrend break on a 5 minute time scale, 15 minute
Hmm.
too. I don't really care for the one
Hmm.
minute when I'm looking at these. I want that 5 minute to show me that trend, and look what it ended up doing. 80 cents. So crazy.
I find I find the 1 minute, especially on these
Yeah.
pennies, can
Yeah.
very frequently be really choppy, and it's hard to read level two down to like the micro penny level, because there are really big bids and asks at this price point. So it can be a little bit hard to read on the 1 minute, but you get a lot more clarity when you're looking at a five
Agree.
minute setup on these types of
And I
stocks.
feel like it's easier to kind of build up positions too when you're looking at a 5 minute. 1 minute, again, you can get tunnel vision, and then before you
Yeah,
know it, you're
definitely.
chasing somewhere and it's extended off the MAs, but the 1 minute looks good, but really it needs to pull back on the 5 minute. And so you need that confluence. Tyson
Yeah,
said, absolutely.
that multi-time frame
Tyson
alignment.
said, Manoli, when you were at the
Yep.
Trader Summit, you slammed a trade into a halt. Are you still interested in those momentum moves during market hours at a $5 to $10 price, or have you completely shifted? I'm going to trade whatever's in front of me and whatever I'm seeing. So if I saw, let's
Hmm.
say I saw top, let's say I saw something like top with this kind of chart where it had this big move and then it's like dead, right? It's just down here. It's trash. And then I saw this in 2 or 3 days make a move to 40, 50, $60. I'm going to be looking at other charts that have a similar setup as top that are just kind of dead in the water that I think other traders are going to smack. And if I see that intraday and it's, same characteristics and it's chasing the halt level and it's $5 to $10 price range, I'm going to hit that. Absolutely. So that's why I'm trading whatever I'm seeing is giving the most range, the most volume. That's what I want to be in front of. I don't care. Like AHI, it gave people great opportunities today, and I didn't even touch it because one, the market's been weird lately, and two, BXRX and Top were the two that ran the last 2 days. And so I'm either looking for something with a beat down chart, but this didn't make too much of a move, and it took 2 days. So I didn't think it was going to happen. For BXRX, where, these penny ones are great. These low float penny ones, they're awesome because you can take a lot of size on them too. So they're 40, 50 cents, but they're also 8 mil floats. And we used to see $5, $10 stocks that were around those 5, 10 million floats. And so they move fast. And this is what happens. And I think as we start to transition more into more of a bull market, hopefully in the coming years, we'll start to see a lot of these low float, low price stocks make some moves and maybe even some OTCs. So I'm just gonna try to trade whatever's in front of me to, long,
Yeah.
or I guess short story long. That's what that's what I do. Just trade the volume and the range, and then there's a good chance that you'll
Yeah.
make some money.
Well, coming into today also, the gap scanner was completely dead. The market opened. I didn't even know the market opened. Neither of us expected to make
Yeah.
really any money today. We're not anticipating or like hoping for anything. Whatever pops up in front of us, we're going to trade it as well as we can, and we're going to trade it according to market conditions, how market conditions have been lately, as well as we can too. So that just affects like where are we taking profit and where are we
Yeah.
adding more, maybe.
No, spot on. Somebody said, how many trades did you guys take today total? I feel like when I scalp with Lightspeed, it's harder to be relentless with getting out quick if I'm wrong because of fees and commissions.
Yeah, I had some issues mentally with
Who
that
you
too when
just
I
use
was with
TD now?
Lightspeed. Yeah,
Nice.
I'm just TD DOS, which I think is just,
Yeah.
it's the
No,
best.
I
I
like it
love it.
too.
It's the best of all worlds. Um, I can look though. I've got my stats up here. I'm at 47 total trades today. Um, but that's on 129. Come on. Come on. Whatever. I'm on. Yeah, 129 filled orders. So executions. So like buy, sell, 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 that's four. And I would be charged $8 on
Okay, I
Lightspeed
have
for that.
filled orders 349. Yeah,
Okay.
that's
So
what happens
you're
when you
you're
trade a
higher
penny
up
play
on that
too,
than I
because
am today.
you're gonna take, yeah, you're gonna have more.
Yeah,
Tyson,
exactly.
no, I
Y-
didn't eat anything yet today,
Yeah.
actually. So yeah,
I haven't either. I'm getting hungry. I need to make some food and head to the
yeah. We'll just
gym
answer a couple
after we wrap
more.
up.
And do you limit bid, ask, or market buy, sell? I do both. Depends on what I'm seeing. Depends on how bad I want the stock. When taking a
Yeah.
downtrend entry like the 35 level, do you accumulate to the downside or keep stopping out, trying to catch the bottom, then add into strength? That's a good question. I will
Yeah,
typically,
it
and
is.
it's dangerous to kind of do that too. I'll typically try it once. So like, where was it? I want to say it was. I forget which candle it was here on the 5 minute where the level two looked strong enough to the point where it looked like it was going to potentially break through the previous 5 minute candle, but then it just rejected. I think I'll try it once and then I won't try to keep chasing it and keep on buying and then stopping out because you don't want to get caught in doing that on something that keeps selling off because before you know it, those paper cuts will turn into, a
Yeah.
much bigger loss. So that's why.
Yeah.
Oh
That's one
yeah.
of my triggers too that I've realized over time is when I keep trying to buy into a bottom, like if it doesn't work two or three times, I have to stop on it because otherwise you just keep getting paper cut and all of a sudden you're down really small
Mm-hmm.
red, and now you're on a
Mm-hmm.
medium red day, now you're on kind of the bigger red day and you're getting hopeful and you're like, but if I catch it here, now there's a lot of range, but it just keeps being sold off
And you
and
miss the
you got to be
ones that
really
are
careful
strong
with
then
that.
too, and you're pissed because you're like, all right, this has to bounce, but it doesn't.
Exactly.
So
You-
I'll try it once. I'll try it one time.
Yeah.
If I don't get it, then I'll wait for the 5 minute confirmation. And so I kind of chased this green candle, this first green candle. So I didn't get it right there at 35, I don't think. I think I had it around 37s and 38s maybe, started slapping in. So that's really it. But it is
Yeah.
dangerous, and I've gotten caught too many times with that. I've had the biggest red days, worst week last week. What do you recommend I do to sort of reset or take a step back? Dylan, it depends on how long you've been trading. Your biggest, like, so I don't know how much you lost relative to, where you're at before. This market isn't forgiving, so don't beat yourself up. It's been a tough one. I think
No, not at
Thursday and
all.
Friday I was red both days. Monday I came in last week. I think it was a $15,000 green day. Tuesday I didn't trade, I don't believe, and then I don't even know if I traded Wednesday. No, I Tuesday I didn't trade. Wednesday and Thursday I took two red days, and then Friday I don't think I traded at all because that's why I missed all those other ones. So I'm finding out the more I'm trading, the more I'm losing. So I would say try to trade less, decompress, make sure you're staying
Hmm.
healthy, you're feeling sharp, but then try to stay away from the screens a little bit. If you've been trading for a while, if you haven't and you're still like working on the intro stuff, the basics, resistance, support, the patterns, you kind of have to be in front of the screens every day just to get familiar with it all. Yeah,
Just get that screen time
yeah,
and
but if
see
you've
how
been doing
things
that
work
consistently
usually.
and you're still struggling to find consistency, I'd say, and you've been trading for like a year or two super consistently every day, same time, same stuff, not bouncing around to different markets, then I would say that
Hmm.
try trading less. Try taking one or two trades or a couple in the
Yeah.
morning, and as soon as you're green, even a little, just get away. And then that'll train you to get used to that FOMO because later on you'll see all these stocks that kept running, but it'll train you to get used to that. And then it'll also train you to be satisfied and more disciplined with taking your money and taking your profits. And then eventually come back and try it
Yeah.
again. And you're like, okay, I'm building confidence. I can do this. And then you can stay a little longer. And you hope that it's not when the market's cooling off again. But I would just say, yeah, stay away from the screens as much as you can. That's what I do. I try to get in, get out.
Yeah, I agree. Just getting green, just any amount when you've had a bigger red day or you're on a red streak or whatever, just getting any amount green and just trying to build up a little more consistency and confidence and hopefully into more of a green streak is just so important.
Mm-hmm.
Confidence itself is just such an edge. When you're trading from a place of fear
Oh,
or like being afraid of losing more money, it's just it's
terrible. You
it's
can't
not
trade like
good.
that. I mean, you'll end up losing more money, and it'll be the
Yeah.
worst kind of it'll
Yeah.
be the worst way of how you're losing money too, because you'll just be second guessing yourself the
Yeah.
whole time, and just yeah, it'll be way more frustrating that way.
Yeah. There's no need for it. Like even if you take a green trade and it was a lucky trade,
Yeah,
maybe just
yeah.
stop.
You'll
Just
build
lock up
confidence
a
that
green
way.
day. It
You
doesn't
you
matter.
absolutely will. You'll feel
Yeah.
good. You'll feel like you kind of
Yeah.
got it. Um, Someone said, can you talk about the
Yeah.
process of scaling in from small size, consistent winners to big size? For me, it kind of happened naturally, Danny. I'll let you talk about this one more, but for me, it just happened naturally. Like I said, I'm kind of like all or nothing. So when I first started off, it's not like I was using the full 30,000 that was in my account because it wasn't all my money. So when I very first started off and I was still learning, I was my full size was like 1,000 shares, right? 1,000, that was full size. And I would just go all in or all out. And I did that every time. And then eventually I built enough confidence and got good enough to where it was the point where I was using my whole account. And so I think naturally it just kind of happened, but be prepared because that's going to come with some big losers as well because you're going to be using your whole account. And as soon as that market turns and you don't recognize it, it's going to happen and you're going to take a big hit, but just know that that's part of the process. And you hope to, you kind of need
Hmm.
that market, you're paying market tuition. And so over time, just realize that that is what you need to work on. It's that right there. It's not you need to get better at trading. You need to learn more patterns, setups. It's that part where you got to recognize, okay, market's a little more choppier. I'm on a streak. I'm on a 20 or 30-day green streak. The market's been hot for a little bit, but these last 3 days we've seen more false breakouts. I've gone red to green to red to luckily back green. It's like, all right, I need to size down. I need to regroup because a drawdown's coming and I got to manage it. At least that's how it works for me. Some people might say, no, you're on a streak. You don't want to end your streak early. You want to keep on rolling when it's hot. It's hard to find that happy medium in that, and that is tricky. That's part of the art. That's part of the process. But like Danny said earlier, we all
Yeah.
go through it on just a different scale.
And just like any one day,
Right.
you have to have a stopping point. And it's the same thing when you're on a roll. Like how long are you going to be on a roll for? How long is your green streak going to last? You have to start kind of getting ahead of what might come up, or like if you start to notice a little more choppiness than you had been, you really just have to pay attention to it. And there has to be a point where you kind of cool off, whether it's on the day or on the week or month where you've been pushing it hard and you've been doing well. But if you keep that up, especially if it's
Hmm.
been a month or two, conditions are going to change, and you have to be able
And
to
don't let
get
the
ahead of
market
that.
conditions make you feel like less of a trader. I think that's important. I know people that
Yeah,
they did really well, and then all of a sudden, for a month, everything was knifing. Nothing had followed through. You didn't even see that much range, so it wasn't even going up too much. It was just bad, and they were
yeah,
getting beat up because they were trying to do the same stuff, and like they really blamed
yeah.
themselves. And you can't. You have to realize that there's just going to be periods of time where it's slower and where it's stronger. And if you can kind of lean into it when it's strong and, pull off the gas when it's weak and you get better at that ebb and flow, you'll, that's kind of the art of trading. And
Hmm.
that's where you'll really start to see yourself progress. At least that's what I think.
I totally agree. Yeah, that's where you start to get into a little bit
Yeah.
more of like being an advanced trader. Is when you start to have those instincts and intuitions and they turn out to be right. And it's kind of the same thing as like sizing up or sizing down into any particular play. You should be sizing up into your best setups once you have some consistency and you're ready to start sizing up. You start sizing up into your best setups, and if it doesn't
Hmm.
go right away, you have to cut the loss. Especially when you're sizing up, because when you start sizing up and taking more size on any of your trades, you're going to have a loss eventually, or however frequently they come, and that red trade might be bigger than you're used to. And you haven't had the chance yet to realize a whole bunch of those
Hmm.
green trades that are also bigger than you're used to. So it's so important to
Absolutely.
cut those losses quickly, whether it's on a single trade, on a red day, red week, at any point, you just have to manage that. That's how you manage
Absolutely.
success as
No,
a trader
I
over
think
time, I
you
think.
have to be okay with inconsistency. You have to realize that you're going to have red days and some of them might be big. And even though you might get better at managing them over
Yeah.
time, it's really not going to necessarily go away. And so if you're not okay with that, then
Yeah.
trading
Yeah.
probably isn't the best career path because it's just
Yeah.
it's frustrating,
I
but it just
agree.
never really goes away. And that's kind of what you deal with, but never
That
changes.
never changes.
Vlad said, remember the time you drove somewhere to not knife a stock when your internet went off? Yeah, what happened? It was, I had good size on a play, and it, I think it was when I was
I remember this.
in Baltimore, Maryland, and the internet went out and it wasn't going to come back up till later. We got like an email. So I had to drive to a Panera and ended up taking like a 40 or $50,000 loss, and I was sick. I
Yeah,
was so sick.
I remember that. Did you get a
No,
did you get a
I'm
backup
no, I didn't.
generator or something after
I
that?
didn't.
Or backup
I'm
internet?
in a different area
No.
now, so I'm not in that same area, but I probably should because our power goes
Yeah.
out here a lot too.
It's
But
yeah. I mean, some of it is just risk of trading, but other things you can try to accommodate for or like adapt to as much as possible. Yeah, like I only have one internet service provider right now. I don't have a backup generator, but I never have power outages, and my internet, I have fiber internet
mm,
here in the Bay from a good provider, and it's
that's good
near
though.
perfect internet. So if you have those issues that are more than just totally infrequent, those are things that you probably need to build into like your long-term strategy is like you pay an extra $70 a month for a secondary internet service, something like that,
I know I
or a
need to get a
backup
backup generator.
generator.
The Zoom ended, but that's fine because we I don't really have anything else to show on there. I can just look
Yeah.
at a couple more questions here. I don't know how
Yeah,
many more there are, but
I agree.
Mikey said, for sizing, do you base it on the 1 minute volume, like one max size? I imagine the size you take, you have to not take too much size, question mark. I mean, kind of already answered most of the sizing questions. I don't really have like a specific method to it, but I will look at the 1 minute and the 5 minute volume and how the chart is looking and you know the range and everything. And I manage the sizing by realizing what market I'm in, and then I'm using a small account. So like right now, I'm using a $40,000 account. I mean, I could take almost any trade that's a leading gapper that has 5 million shares that are traded on the day, and I'll be fine. Now, unless I'm taking something that's just popping
Yeah.
now, and it's like 10,000 shares of volume, I'm not touching that. And it might be up on the day, but like, yeah, I'm just not going to touch it. I need good volume, which is why I took RMED. So out the gate, oh, I can't show you guys. Out the gate, I took a trade on RMED, but it knifed. So I took it and it popped up a little bit. I think I was unrealized green, like 1100 on it. And I used full size because it had 3 million shares traded, I think, pre-market. And nothing else looked good. There wasn't really anything. It had kind of a little bit of a tiny range if it got through 115. It rejected like 113, 114, and I ended up having to sell for a loss around 106. And so I took a $1,500 loss on it out the gate. But it had a volume on the day. Everything was good. It just rejected. That's the market we're in. So I don't have a specific method to my sizing. What are you risking on that 5 minute setup?
Yeah. I think maybe two good questions to wrap it up with that I've seen a couple people asking about advice for beginners, do's and don'ts, and then there's another good one towards the end. If you had just one setup that you only played, what would it be? What conditions should be met before you take it? So, just real quick from me for advice for beginners, trade less. This is something that over the last 8 months or so, I have finally had to really work on. Um, Manoli and I both started trading in early 2020 when the market, and then especially 2021 when the market was just a freaking rocket. Like it was hard to lose money in that market. And so I developed a lot of bad habits, mainly one of them over trading and overstaying my welcome. And so finally, over the last 8 or 9 months or so, I've really had to rein that in and try to get a handle on that and create better discipline and better habits that have really been serving me well this year. So number one advice for beginners, trade less because then you can get a lot more insight out of your trades if you only have this trade here and this trade here rather than like 1, 2, 3, 4, 5, all of these trades here and you're like, this looks crazy. I can't take anything away from that. Um, so that's the main one as far as advice from me. And then if I only traded one setup or one trade, it would be basically fast dips off of support in the context of an overall
Yeah, you've
strong
always loved
stock.
those. Those have been your go-to bread and butter for a while now.
It's it. That's what I'm leaning into and sizing up on finally and
Beast. Yeah,
serving
I
me
kind of
well.
already went through all of those. I pretty much already answered those questions, and I don't really have. I mean, yeah, trading less. Well, for it depends on how much of a beginner you are. So because I think you need the screen time. So if
Yeah.
you're a beginner, if this is what, if I was going to give
Yeah.
one piece of advice to somebody who's just starting now, I would say that you have to come to the market and be prepared to trade every single day, every day from 9
Hmm.
Eastern time, 9 a.m. to like 10:30, 11, because that's going to be the most volatile time
Yeah.
period. And then what you'll do is you'll get better at recognizing what market you're in. You'll become one with the market almost. As dumb as that sounds, it's like you'll be like,
Hmm.
you do that for 6 months
That's
to a year, you'll
totally
start to see
true.
all the setups, you'll start to see how these things trade. It won't feel foreign to you, and then you'll master that little period of time. Now, that's the first piece. The second piece is that also have to recognize that when you're green in that period, shut down your screens. Okay. And the reason I'm saying like it depends on how much of a beginner, because when you're a beginner, you need to learn all this stuff. So you still need to learn support, resistance, patterns. You need to pay your market tuition and be in front of the screens, um, trading to learn in that same time period. When you're a year or two out and you're still kind of a beginner in terms of like you're not really profitable, you're struggling, you need to just take your money. You're giving into FOMO too much. You're probably a good trader. You can find good
Hmm.
entries, but you're either taking too many trades or you're going green and then you're just like you're nobody knows where the green's going to end and where the red's going to begin. And you have to realize that, because the more trades you're going to take, eventually you're going to take a loss. So why not just end on a high? I ended on a high. Like I could have kept trading Vine and potentially made more money. Or I could have taken a knife, lost half my game, been pissed, saw it go up to
Yeah.
80 then right after, and now I'm ticked off because I just gave back half my profits. And I've been, we've all been there. So you got to stop thinking, okay, but the more I trade, the more money I could make. Take your money. Take your green days, build that consistency, and then eventually you can stay a little longer once you prove that you can be consistent. But that's the biggest piece of advice. I don't have a specific setup.
Yeah.
I look at all the setups. I try to look at everything I can, and when I see something's working, like for example, if I see that reverse splits start taking off, guess what I'm going to be slapping the next day? It's a reverse split. And I can almost go blind with it, because if it's that strong and I have that much conviction behind that thesis and it has the same characteristics, you know, people are going to FOMO in. People are going to go into it, and I'll make my 5, 10, 15K, hopefully that day. Or I'll take paper cut losses on 3 out of 4 of them and I'll ride the one that goes. So that's it. I don't have a specific setup or one
Yeah.
go-to thing. I'm looking to see what everybody else is going to potentially be trading or want to trade.
That's a good point. Yeah. My favorite trades are those dip trades, but I'm
That
trading
you
whatever
noticed,
is
right?
in
That
front
you're
of me
picking
that's
up on and you're
strong.
kind of like, oh, okay, this is working for me. I'm
Yeah.
going to keep doing this today.
Yeah, exactly. Today or like this week or like the catalyst a couple
Mm-hmm.
months ago was AI, and it's okay right now. Like AI news is it's okay. It depends on what it is, but if there's a theme like you were just saying, that's the stuff. You want to get yourself into the position of being in a trade. Someone can come in, break into your house, knock you out. You're still making
Yeah.
money when you wake up 10 minutes later,
Yeah.
just like Jess says. I heard a good quote. I was on Instagram, I was scrolling. They've got me nailed down with the ads, but they have me on this masterclass ad with like Ray Dalio, a couple other guys, I forget their names, but one of the guys, I love the quote. He said something like, trading is not for your personal excitement. Like the reason to be trading or be putting on trades, sure, it's fun. It's fun to be in a trade and it's exciting, but like that's not the
Right.
point. The point is to make
The point
money.
is to make money. And it's tough because I know sometimes you hear process over profits. And I think that there you hear so many different things in trading. And a lot of it can be taken out of context. And the
Hmm.
process is absolutely important. But we're here to make
Yeah.
money. We are here because you're either trying to reach financial freedom or supplement income, or you just want to be a good trader, whatever it is. In order to do that, you have to be able to take the money and stop trading. And like that's the hardest part for people to wrap their heads around. It sounds so stupid and so simple, but for some reason, and even for myself included, some days
Yeah.
it's just like I can't get away. And when I notice that and I'm in that mode, that's when I make it a point to try to run more, get some sun, eat healthier, get good sleep, because I think it's easier to have that control then and recognize things when your habits are good. But that's it.
It, yeah, I totally agree with that. When you have good habits and like a good positive spiral going on in the rest of your life, it makes managing trading so much easier. But even going back to the fact
Oh
that
yeah,
we still take hits and we still overstay our welcome just 2 weeks ago, or like a week and a half ago now, it was Friday, the week before this past Friday. I went from up like 200, 300 on the day, which is a really small green day for me, and I was looking for a little more, and then I was up 100, and then I was red 50, and then I was red 300. I ended the day down 2 grand. So, it
absolutely.
still can happen.
And then that's the part where if you remember that it happens to everybody, you won't beat yourself up so much when it happens to you because that's
Yeah,
like the main
it's
part
just
of it.
part of it.
It's like that's the cycle that most people can't break. So don't beat yourself up. I mean, that's once you
Yeah,
can get through that cycle, then you'll be golden.
yeah. For me, it's the thing always has been like there's basically two options. One, I quit, or two, I keep going. And, especially being a profitable trader at this point, number one obviously isn't an option. Like, what are the odds that I'm never going to have my account past that value where I just took that red day again? Like, probably pretty low. I'm
Mhm.
probably going to make it up at some point. You just need to be a little bit patient and keep it going
Dude,
and
and
just
you've
try to
gotten
learn
better
from that
too.
red day.
Like I know you had a spree
Thanks.
there where
Last,
you were in a funk for a couple months. It had to have been. It was a good time last year.
no, it was
Was it the
last
whole
year.
year?
It was the entire year.
And look at you now.
Oh,
And it's
God, it
like,
was a
man, I
mess.
love that because
I know.
you're crushing it this year. Like you
Yeah,
are Mr. Consistent. I mean, more consistent than me. I definitely have more red days than 14 and they're big. So you're just over here, inching your way up, making your $2,000 a day, and that adds up. And before you know it, you're going to be at 500,000 to a
yeah.
million end of the year. So I love it, Danny.
I appreciate it. I appreciate it. Yeah, it's a long work in progress, just as it has it been for you and for anybody else who tries trading. It's a work in progress, and you just try to get better over time. And fortunately, this year it's really coming together for me, and we'll see what the rest of the year brings. We're halfway through right now. I would love to have a as decent of the second half of the year as the first half was for me. I don't have any expectations, but I don't think that's that much to ask
Yeah.
for. It has not been an easy market this
Yeah.
year. So we'll see.
Cool.
Yeah, just trying to
Well,
keep it
of
going.
course.
I
And we'll have
appreciate
to do more of
that.
these. We'll try to get more organized with them so that it's kind of
Yeah.
just clear cut and has a clear, I guess, theme to whatever we're talking about right now. I mean, I especially just went on a couple tangents
Yeah.
because it's the first one and it's been a while and I just wanted to kind of knowledge dump on
Mhm.
everybody. But, I appreciate everybody who wants to listen to and learn and grow. And I'll try to do my best to give back and help as much as I can. Because it's not an easy path. It's frustrating.
Yeah.
Even when you get to different levels of it, it's still very frustrating. And it's not very
Yeah.
relatable to people that don't trade. So, I'm always here for you guys and,
Hmm.
hit me up, message me on either Twitter or Instagram. I'll get around to them. I'm terrible at that stuff right now, but I will get better over time as I start to engage more and try to help out. So yeah, just keep on keeping on
Yeah.
and I think your time's coming. It's just a matter of time.
It's a matter of time and just, don't let yourself get knocked out of the market. Manage those
Exactly.
losses.
All right, Danny. Always a pleasure chatting with you, bro. We'll do a
All
couple more of
right.
these.
Same.
All right, bro.
Same. Yeah. Whenever you're ready.
Yeah, you
All
too.
right, cool.
See ya.
Have a good fourth. I'll talk to you soon.